We don't have trading in Japan. We don't have trading in the US, of course, later on, worth pointing out for Thanksgiving. MSCI Asia Pacific then, so stocks essentially in the Asia region, up by 0.4%. Chinese property, one of the themes there. The dollar is a little on the back foot. Perhaps it went too far on the University of Michigan signals on inflation. That was Mark's view, at least in the last hour. I put in the Dutch 10-year yield here, 2.9%, but just to show that it's not moving all that much on the politics, we keep watching what happens there with the coalition building process. And the Brent price, 81.39, so we're down another 0.7%. It moved a lot yesterday lower on the back of that news of the delay of the OPEC Plus meeting, but then it was a very volatile session. It's not just about the supply side, it's also about the demand side now with stockpiles building in the US, Tom.
A mixed picture across these futures. FTSE 100 looking to gains of about 0.3%, but you're looking off by about 13 points on DAX futures, Anna.
Okay, so a pretty mixed picture, flat picture then on the futures coming through this morning. We will see where that takes us at the start of the trading day. Worth bearing in mind what we were hearing around iron ore prices from Mark as well when it comes to the UK market. Sometimes that's a factor in the basic resources sector. But this is what we've got then so far in terms of equities, all very grey, so not big moves coming through on the equity markets as we had expected, as futures were really suggesting. There's the weakness in the dollar I was talking about, allowing a little space for the euro to bounce back a touch and the pound to bounce back a touch. We've got around half an hour to go until the Riksbank meeting, so we'll certainly watch the Swedish story coming through there. A little bit more strength than coming through on the UK and the French market now, but nothing huge. This is the story we have around sovereign bonds right now. So tentatively buying stocks and selling bonds would be the overall takeaways from this GMM, I suppose, this morning. Yields going a little bit higher. No particularly strong move in the Dutch market. We saw that earlier on, and we have seen, of course, the UK market responding largely to what was happening with gilts, the DMO announcements around issuance. So we'll keep an eye on the UK 2-year there as we see that yield go a little bit higher there, and a mixed picture on commodities. Tom, what do you see on sectors?
Across your sectors, 3 sectors in the red right now. Tech is taking a bit of a hit, down 0.2%. The context is that tech was one of the leading sectors yesterday, so just giving up some of those gains. Anna's been talking about the energy story in basic resources, so let's reflect on that briefly. The energy sector actually posting pretty decent gains of 1% after the pressure that came through. One of the biggest losers across your sectors yesterday was energy, on concerns about that delay in the OPEC Plus meeting and what that may mean for some who had expected cuts to come through from the OPEC Plus cartel. Of course, basic resources getting 0.7%, some countervailing factors here, but most predominantly the moves coming through from Beijing officials to shore up the real estate sector. But we did also have officials coming out and trying to push those iron ore prices lower, concerns around speculation there. But the sector is gaining, currently 0.7%. Insurance is down at about 0.1%. One of the other sectors that's standing out to me is the banking sector is actually flat. The industrial's gaining 0.3%. Across your benchmark, you're at 457, just a modest gain of 0.1% this Thanksgiving Day stateside, Anna.
Okay, so we are thankful for a rise of 0.1% then on the Stock 600 this morning. Let's dive deeper into some of the main macro themes driving markets today. Let's talk to Sam Unstead once again from our Markets Today blog. And let's go global this time. We focused on the UK in our last conversation, Sam. So let's think about some of the inputs to the European trading day and those coming through from Asia. China is considering unprecedented builder support with unsecured loans. So on the one hand, this sounds like it could be forceful, quite powerful, but on the other, it's something they may do, not necessarily will do. So how do we view this?
Yeah, something they may do. So as with all things China, I kind of turn around in my seat and ask Sophia Hortry-Costa, yes, exactly, whether this is the stimulus that everyone was looking for. And she said, not quite, but this is a major move and also extremely risky. It's for Chinese authorities. This is unsecured loans to a sector that is struggling enormously. The story we had out earlier we're talking about $446 billion worth of shortfall in funding. So if this does happen, this would, I think, be the most kind of significant and very, very targeted move that they've made so far.
Yeah, and the idea is it would address some of that day-to-day funding challenge for these real estate companies, so then they can then focus on paying down some of that debt. And the priority we know from the government in Beijing is to make sure these apartments are actually built, because so many people, hundreds of thousands, if not millions, have put down deposits on them. So there's that social risk as well, politically, for China. When it comes, the other major story, of course, of the week that we followed all the twists and turns of was OpenAI. Is that resolved? What have we learned from that whole saga?
I don't think it's resolved. I think, the early part of it, so the part that has gripped everybody, Sam Altman being ousted, joining Microsoft briefly, then going back to OpenAI and the board going, all of that has now been resolved. But now it comes into the question of what the company is, what the company is going to be in the future. And in terms of what kind of board of directors they are now going to take on and what direction that pushes OpenAI in. And this also came with NVIDIA coming out this week, the kind of poster child, really, of the AI boom in stock markets. And we saw yesterday, actually, their shares fell. Their results were a complete blowout. They beat absolutely every metric you could see, but their shares were already up. They'd already tripled this year. And so that has raised a few questions about whether that AI boom is starting to just cool down a little bit. I mean, whether that's the case or not, if it's starting now maybe to turn into a longer-term theme, we shall see over the course of the year.
And talk to us about oil. So often a focus for markets, 81.40, and certainly those in the UK watching, UK stocks, oil, a big part of that. We now have to wait a few more days for OPEC Plus to craft a solution to try to come to one view on what they should do around production. But that's what we're waiting for now.
Yeah, I think so. And that's the kind of fundamental thing we're waiting for. You guys just mentioned as well, energy stocks actually higher this morning. That'll probably be giving the FTSE 100 a little bit of a lift over the course of the day. But it is also worth remembering, and you guys have already said this a couple of times, the US is closed today, so the amount of trading there is going to be a little bit thin over the course of the day. So it may be that we need to wait really for the weekend and then for next week to kind of really get a picture on what the fundamentals are for oil.
Yeah, thin volumes. Currently oil, Brent down 0.7%, but still above $81 a barrel. Sam Unstead from our Markets Today blog, thank you. Worth checking out, of course, the blog written and put together by the team on the UK website, or by going to your terminal and typing in T-Live Go, T-L-I-V Go, on the terminal. And Anna, you have a look at what else is on the agenda for us.
Yeah, absolutely. A reminder, again, US markets closed due to Thanksgiving holidays. However, there's plenty to watch elsewhere. In Europe, a host of PMI data is due this morning, some of it coming just in 10 minutes' time, in fact. We'll get numbers from France, Germany, the Euro area, and also the UK. At 8:30, so in around 25 minutes, that's UK time, we'll get Sweden's Riksbank decision, its latest rate decision. The expectation, there's a bit of division there. The expectation does seem to have divided economists. At 12:30, the ECB publishes the account of its October policy meeting, and this afternoon, the South Africa Reserve Bank will deliver its latest repo rate decision. Bloomberg Intelligence sees the central bank holding despite an uptick in inflation. And so, Tom, the Riksbank putting central bank action back on our European radar. There's been plenty of other decisions going on, lots of African banks deciding, and in Asia as well. But in terms of the European decisions, so economists do seem to be pretty torn. The majority do see that we'll get a hike, but 8 out of 21 economists surveyed by Bloomberg said we'll get a hold. I mean, this is interesting in itself, but also interesting in terms of the broader story, because we're talking about a lot of other global central banks pausing right now. Not all of them, but quite a few of the big ones, the Fed and the ECB, for example. And so if you're moving in counter to that direction of travel, that's going to raise questions.
Well, to your point, it ties into that broader question, which you've been posing as well, which is to what extent do these central banks have to wait for clarity from the Fed? Does the Fed have to move first, basically, to allow space for the ECB and the BOE? Of course, for Sweden, there is the particularity. Well, it's not just idiosyncratic to Sweden, but there is particularly acute concerns about the real estate sector as well. So that is certainly going to be a factor, it seems, for central bank officials there. We await, of course, the data out of France. Interesting to hear from T.S. Lombard Schuyler at Montgomery & Koenig saying that Eurozone has already done too much. The ECB has already done too much at 4%, and they're going to be the first to cut, is her view. Yeah,
that was her view. We got that earlier. Coming up on the programme, we'll look at the stocks that are moving in early European trading, including Dutch-exposed stocks, as the far-right party wins in a shock election result. This is Bloomberg.
adults are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Could face bigger challenges next.
Was going to keep Green World Cup. This is a 3.
As the economic picture does.
Is it the okay is getting ready to make a decision?
This is Bloomberg. This is Markets Today. 10 minutes into the European trading day, and European stocks are, well, pretty flat, slightly positive. Joe Easton joins us from our equities team with a briefing on some of the stocks that are on the move and moving more than the benchmarks then, Joe.
So we've got some clear red over in Amsterdam in early trading following that election win for the far-right candidate. Most of the weakness in the banking stocks like ING, also ABN AMRO, clear underperformers on the Stocks Banks Index today. Question marks over whether there could be a referendum on EU membership for the Netherlands. A long way to go before we get to that point, given there'll probably have to be a coalition formed in order for him to take power. But we're seeing weakness as well in some of the insurance stocks. ASR Netherlands was lower, coming up a little bit. Also ASML, the chip machinery giant, amid question marks over the relations with China. Clear weakness over in the Netherlands this morning. Then in terms of a couple of other stocks that we had on our radar this morning, we'll flip over and look at Rheinmetall. Reports out of Germany that the German government could potentially put aside around €100 billion fund that was set aside for funding for the military following the breakout of the war in Ukraine. A reduction in military spending in Germany weighing on the biggest one, Rheinmetall over there. We've also brought up BAE Systems, another defence firm here in the UK. They've got a price target upgrade over at JP Morgan. They lift it to a street high, saying that the UK spending looks pretty solid for now, and also over in the US as well, a big company there. Now, Hesselt, we added in because this is a similar German supplier as well, so we're seeing a negativity in both of those stocks. It's a bit of a smaller company, but a read across following that report from the German newspaper this morning. Virgin Money, this is earnings out today for the UK Challenger Bank, continues to see deposit migration coming out. There's also the rising threat of Monzo potentially on the radar for them following news of an investment by Alphabet. I've seen that mentioned in a few notes recently for them. Virgin Money earnings, though, weighing on that stock in London this morning. In terms of some broker moves, we've got Auto Trader assumed sell over at UBS. They say the valuation is too high, and also note that the boom in used car sales following those supply chain shortages is starting to ease at the moment, so they've got to sell on that one. Anglo American is a buy over at Deutsche Bank, who says that the decline in diamonds in terms of sales is starting to recover as well. If you're looking for a Christmas present, maybe some diamonds might be on the radar there. Novo Nordisk we had in stocks to watch following the investment over in France 500 jobs just outside of Paris to build a production factory for Ozempic and Wegovy. And finally, Total, we did expect a decline following the drop in oil prices, but it's coming back up. Potentially some of those OPEC concerns priced in, but a lot going on once again in those stock movers.
OK, Joe Easton from our equities team, thank you very much indeed for walking through some of the key movers this Thursday morning. Let's go from the micro then to the macro and a look at the policy here in the UK. Britain's Chancellor has announced larger than expected tax cuts during his autumn statement. Here are some of the other key takeaways then from Jeremy Hunt's address to the House of Commons.
We promised to halve inflation and we have halved it. Headline inflation will fall to 2.8% by the end of 2024 before falling to the 2% target in 2025. The OBR expects the economy to grow by 0.6% this year and 0.7% next. We reduce debt, cut taxes and reward work. I will therefore increase the local housing allowance rate to the 30th percentile of local market rents. This will give 1.6 million households an average of £800 of support next year. I'll invest a further £500 million over the next 2 years to fund further innovation centres to help make us an AI powerhouse. I'm going to go further and cut the main rate of employee national insurance by 2 percentage points. That change will help 27 million people. The economy has grown. Rather than falling as predicted, our plan for the British economy is working, but the work is not done.
OK, the UK Chancellor, of course, with the autumn statement yesterday. Joining us now is Jack Mealing, UK Chief Economist at Barclays. Jack, good morning. Thanks for joining us in the studio. Was there anything within this policy package that stood out to you that changes your view, your team's forecasts around growth or inflation for the UK?
I mean, I think broadly across the whole package of things we saw yesterday, actually the impact on growth and then particularly on inflation is probably quite minimal. I think when you look at the estimates of impact between the supply side and demand side of the economy, the boost you get to growth is broadly netted off to the supply side of the economy. So we wouldn't expect this to be largely inflationary. I would say the one big thing that probably people should keep an eye on is the announced increase in the national living wage. So that has the potential to actually move the dial slightly on what we see as an inflationary path next year.
Did you say largely uninflationary or inflationary?
So largely uninflationary outside of that national living wage.
Right, yes. And so tell us a bit more about that, because the timing of that is interesting. You were explaining to us earlier, because when it kicks in is around the time that we're going to start thinking much more seriously about, well, when is the Bank of England going to cut interest rates? We assume from here.
Yeah, so if you look at kind of market expectations that towards the middle of next year, cuts are starting to come in, then this national living wage is producing what we at Barclays in our research think is about a percentage point increase on the month-on-month rates of wage growth at just about that time, so April, May next year. And so you could argue that that's something you should just look through as a monetary policy maker. That's, you know that's a one-off blip. And if the underlying momentum of wages is still pretty weak, then it shouldn't change your decision on whether to move rates or not. But actually the optics of that, of wages potentially slowing in how much they fall, so that kind of deceleration actually slowing up, that could be quite important as an optical thing for the MPC, and they might want to wait a little bit longer to see whether that is underlying wage growth slowing or whether that's a bounce back.
Overshadowing the autumn statement then, and the relative optimism with which many Conservative MPs welcomed some of these policies, was the OBR and its downgrading to growth, particularly 2024, 2025. So the Office of Budget Responsibility here in the UK adjusting lower its forecast for growth for the country from 2.1% next year to 0.9%. How do you view that forecast? How does that align or not with the Barclays forecast? Is that still overly optimistic about the trajectory of the UK economy?
Yeah, I mean, I think our view is that is still pretty optimistic. So for us, we expect the economy next year to be broadly flat. And
no growth in the UK economy.
So 0.1, but I mean the story is a stagnant economy through 2024. And the large reason for that, I mean, if you look at the way the momentum has gone in the last few months, we saw the Q3 data obviously come in as flat on the economy, but importantly in that domestic demand was a real disappointment in the sense that, the only thing that stopped us going into contraction was really weak import performance, which managed to offset that weak domestic demand. You play that forward, you look at the PMIs, we're going to have the update later today, but if you look at the kind of recent PMIs, they suggest that's carried through into the fourth quarter, and we would just expect that with consumer confidence low to feed through all the way through next year to sub-trend growth. The OBR obviously take a different view on that. I mean, one, they have a more optimistic view on kind of potential growth of the UK economy.
You mentioned the PMIs, and I just want to take a little detour into some of the French data we've had just hitting, and then ask you a broader question about our trading partners, I suppose. But the French November manufacturing PMI coming in at 42.6, that's lower than the forecast of 43.3. The services PMI rising to 45.3, so it is rising, but just a touch below the forecast of 45.5. Anyway, both of these still in contraction territory, obviously, and the euro had dropped a little on that, although it's clawing its way back. I mean, you're focused very much on the UK story, Jack, but weakness in one of our big trading partners, not just France, but the whole Eurozone, really, that's going to be something that's on your radar, I suppose, in the year ahead.
Yeah, absolutely. I mean, I think, if I look at where our European team have the kind of the euro area forecast, the cycles are relatively kind of synchronized between the UK and the euro area, as you would expect with one of our biggest trading partners. So the latest data doesn't feel like much of a surprise in terms of that broader narrative of a slowing euro area economy, like the UK teetering around kind of, no growth, potentially with a technical recession around the corner. So I think that kind of tells us that the story across the euro area and the UK, in our view, is broadly similar.
Look, we're not going to get too much into the politics, but we know an election is upcoming here in the UK, whether it comes earlier or later. Very briefly, what is the fiscal space that is left for the Chancellor before that election?
So currently, if you take the OBR, there's about 0.4 of GDP, which is a pretty small amount by historical standards, so that's not much money to play with. And then when you look into the fact that that comes at a point where, in that forecast, in cash terms, more or less, the expenditures weren't really revised compared to where we'd seen before. That means that even to achieve that, you need to kind of have real terms cuts in government expenditure across a lot of departments. So there's a question about how credible that is going forwards.
Yeah.
And I would say on top of that, you also have this phenomenon of the fact that, debt interest is a large part of this story. And at the moment, the yield curve is relatively high. If we were to see that drop away, maybe because cuts get brought forward for the Bank of England, or alternatively they're pushed back, that can more than outweigh the space that's currently in the forecast.
Jack, really appreciate it. Thanks for coming to the studio with the analysis on the autumn state and the implications for the growth and inflation story here in the UK, with a focus on wages and expecting flat growth here in the UK in 2024. UK chief economist at Barclays. A couple of redheads that have crossed the line just in the last few minutes. One coming through from the European Union, set to approve as much as €1 billion of funds for Hungary. Now, we know that Budapest have been wrestling with Brussels over this funding. The EU is now set to approve that €1 billion of funding for that country.
And we've seen the Hungarian currency respond to those headlines. Coming up on the programme, the far-right leader, Geert Wilders, stuns with a Dutch election victory, sending shockwaves around the EU. We will analyse what it means for the bloc. This is Bloomberg.
On the product may read "Made in the USA," but the sign on the CEO's door often says "Made in India." Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
From the world of politics to the world of business, Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
This is Markets Day, 24 minutes into the European trading day. European stocks are flat. Let's get to the politics, though. Far-right politician Geert Wilders has come first in the Dutch elections in a shock result that will resound across Europe. The Freedom Party leader will now have to forge alliances in order to lead the country. Joining us from Amsterdam is Bloomberg's April Roach. April, good morning. Can you give us a breakdown of the results then and what it all means?
Good morning. Yes, so as you said, Geert Wilders' far-right populist party was the surprise winner in the Dutch elections last night. And a late surge in the final days of the campaign saw Wilders' party rise to the top of the polls. His party is anti-Muslim. He has tough policies on cracking down on immigrants in the country. And he's also spoken out against sending aid to Ukraine. And his party is set to claim 37 seats, more than doubling its representation in previous governments. Whereas in second place, we saw the Green Left alliance led by Frans Timmermans with just 25 seats, and the current ruling party dropping into third place with just 24 seats.
Okay, so those are the numbers, April. Who will be the new Prime Minister? I guess we can't answer that question just yet, and it might take a long time to get to the answer.
Yes, that's right. The Netherlands is a coalition country, and while Wilders' party is set to be the biggest, it has just 24% of the vote. So whether he will become Prime Minister will very much depend on whether he's able to form agreements with some of his rival parties. And those coalition discussions could take months, so it could be a while yet before we know who will be the Prime Minister of the country. And also to know, only once in recent Dutch history has the biggest party not become Prime Minister of the country.
Look, he's promised a referendum on the EU. Is that because the Dutch look enviously over at the brilliance of the Brexit project? Or is an exit really in the offing? Come on, is it?
Yeah, I mean, it's a good question. I mean, these results really show that after 13 years of the current ruling party, the Netherlands is really clearly shifting towards the right. It really shows that Dutch people want a change. And while Wilders' manifesto, his party election program, does call for a referendum on the country's participation in the EU, it's also important to note that none of the other political parties want to leave the EU. And Wilders has been seen as softening his stance on certain policies in recent days. So it doesn't necessarily mean that we will see an exit, but it's now on the table.
Okay, you said the word. April, thanks very much. Bloomberg's April Roach joining us there in Amsterdam. Coming up on this programme, the UK's Chancellor released his autumn statement yesterday. We'll get reaction from the Labour Party. That's coming up next. This is Bloomberg.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Markets Today, 30 minutes into your European trading day. Here are your top stories. Far-right leader Geert Wilders secures a dramatic win in the Dutch elections, promising a referendum on leaving the EU. Property push. Country Garden leads China's developers higher after Beijing's biggest push yet to shore up the troubled sector. Plus, oil slides as discord within OPEC Plus forces the group to delay a crucial meeting, ending speculation of further production cuts by the Saudi-led alliance. So, Tom, a complicated picture building ahead of that OPEC Plus meeting. We're without the US today. It's Thanksgiving, of course. We are thankful for some very small gains on European stocks this morning.
Thin volumes is what's expected, of course, because of that Thanksgiving holiday in the US. So you're currently seeing gains of about 0.1%, 457 across the European benchmark. Over in Germany, the futures had been pointing to a negative session. So far, though, grinding out gains of 17 points, just below that 16,000 level for the DAX. Here in the UK, the FTSE 100 still below 7,500. It's bouncing around that level for the last few days, adding 16 points in the session, up 0.2%. Let's flip the board then and think about how some of those factors around the support measures from China coming through, from real estate and the oil story are playing in to the sectors on a sector-by-sector basis. Worth noting that Vodafone is one of the biggest losers on the telecoms, and that sector is under pressure. Tech is off by about 0.1%. Banks doing relatively well, gaining 0.5%. Across basic resources then, there's the upside coming through from that optimism on proposals that could be pretty significant in terms of rewriting the real estate crisis in China and what that could mean for some of those miners, up 0.5 or just below 0.5%. Energy is actually rallying as a sector, gaining 0.8%, making up for some of the losses of the last few days. OPEC Plus pushing back that meeting, of course. Food, the consumer and tech, the three main sectors out of these 12 that are in negative territory so far in the session. Gains across the benchmark of 0.1%. Anna.
Okay, let's get to some breaking news. We'll start first with the German PMI story. We had that disappointing at the margin story around France. The German November manufacturing PMI, 42.3. That's a little ahead of the forecast, but it's still very much at the bottom end of the 40s, far from 50, far from expansion territory, of course. But maybe tying in with Scarlett Montgomery-Koning's views earlier on that we've seen a bottoming out of the manufacturing data. The German November services PMI rising to 48.7, just a touch above the forecast as well. So perhaps at the margin, a slightly better story coming through on Germany than we saw in France. We saw the euro drop on the French data. It's gaining now on the German data, but certainly something we keep in focus. Is the euro move about the German data, or is the euro move also about what's going on against the Swedish krona? We should get to the Swedish Riksbank story. They've left their policy rate at 4%. We said that 8 out of 20 economists had seen that happening, but the majority had expected to see a hike. So we had expected to see rates go up to 4.25%. So as a a result, we see their currency is weakening against the euro. So the euro, as you can see, is spiking higher against the Swedish krona on that chart. Not by a huge degree on the day, but you can see that it's the euro unwinding the earlier move. So we'll keep watching what's going on there. The Riksbank rate may be raised further at the start of next year, so says the Riksbank. So a reminder, Tom, of some of the hawkishness we're still seeing, refound hawkishness over at the RBA, the Riksbank continuing to hike, even in the face of a lot of global central banks that are now seemingly on hold.
Well, it's optionality that central banks want to be going for as the data remains, of course, in flux. So that optionality being expressed with the Riksbank statement that rates may be raised further at the start of next year. Let's get to some of the other top stories of the day then on the Bloomberg terminal. Bloomberg has learned that China may allow banks to offer unsecured short-term loans to qualified developers for the first time as part of a package of new measures to backstop the real estate industry. Regulators are considering allowing banks to issue so-called working capital loans to some developers. It comes as Beijing embarks on a major push to ease the property crisis that's dragging down growth in the world's second largest economy. Talks over a short-term truce between Israel and Hamas have continued overnight, with Israeli officials signalling the release of hostages from Gaza would be delayed for a day until tomorrow. It is unclear if the four-day pause in fighting would also start later or begin today as initially envisaged. Under the terms, Hamas will free 50 hostages from Gaza in return for the war's first pause.
The governor of New York says there is no sign of terrorism so far in the vehicle explosion that killed 2 people at the Rainbow Bridge, a busy crossing between the US and Canada. Katie Hochul says a suspect with ties to Western New York has been identified, and the investigation will determine if it was intentional or accidental. The US has raised allegations with top officials in New Delhi that India was involved in a plot to assassinate a Sikh separatist living in America. The White House says the issue is being treated, quote, with utmost seriousness. The allegations come just months after Canada accused the Indian government of involvement in the murder of a Sikh separatist leader on its soil.
OK, let's get back to UK politics now, where Britain's Chancellor has given, of course, his autumn statement. That was yesterday. Jeremy Hunt unveiling a 2 percentage point cut to the headline rate of national insurance, a payroll tax, a move he said would help 27 million people. He also said he'd provide a £21 billion stimulus to the UK economy in the run-up to the next election. Joining us now is James Murray, the UK opposition's shadow Financial Secretary to the Treasury. James, good morning. Thanks so much for joining us for your reaction. Which of these measures outlined by the Chancellor would a Labour government roll back?
Well, look, there are individual measures in what the Chancellor said yesterday that we've been calling for. We've been saying that taxes on working people are too high. We've been calling for full expensing for businesses to be extended. But the problem for the government is that nothing they announced yesterday comes even remotely close to compensating for the damage they've done to the UK economy over the last 13 years. And yesterday, in the autumn statement, that damage was laid bare, because if you look at the projections issued alongside the autumn statement, the growth forecast for the UK economy has been downgraded in each of the next 3 years. Next year, growth forecast has been cut by more than half. At the same time, inflation has been revised upward in every year of the forecast period, and the tax burden is still set to be the highest in peacetime. So the conclusion from the autumn statement yesterday is the cost of living crisis is still here, very much here with us. There's no plan for growth, and Labour has the only plan to get Britain back on track.
James, good morning to you. Clearly the politics plays out, and you blame the governments for their record over 13 years and the weaker growth and the higher tax that has timed with that. But shouldn't we also mention the small matter of the pandemic? James, isn't a high tax burden fairly inevitable on the other side of a pandemic where generosity was required?
But this is not just about the last 2 years. This is about 13 years of the Conservatives being in office. Because if you look at their record in growing the economy over the entire 13 years that they've been in power, it's been growing far lower rate than it was under the Labour government before then. And the practical impact of that is that obviously our GDP figures are lower, but also households are struggling more to get by. And I think there's some truly astonishing statistics which are coming out this morning as people start to analyse what was said in the autumn statement yesterday, such as the fact that real average earnings are not going to return to their 2008 level until 2028. that is an unprecedented 20-year stagnation in living standards. And this government, through not growing the economy, through increasing taxes so much, through not having a plan to work with businesses and get the economy growing, has shown that it has the wrong approach.
James, you and the Labour Party, you have a healthy 20-point lead still, approximately, in the polls. If you get into power then, the take is from many economists that we speak to that you will be left with the option of either cutting services or raising taxes. Which will it be?
Well, look, you're right that what we would inherit if we won the next general election would be a real mess. We would inherit a really difficult fiscal situation, a weakened economy, public services that are crumbling. We're under no illusions about how difficult it would be if we were to win the next general election. But what we set out is targeted tax loopholes that we would close in order to spend that investment on public services, closing, for instance, the non-job tax loophole and spending some of that money on increasing the number of appointments in the NHS to get the record backlog on the NHS down and under control. But in the long run, we are very clear that the way that we can invest in public services, the way to make people across Britain better off, is to grow the economy. And that's why our plan for economic growth is so central to everything that we're setting out.
Given the limited headroom then that you might have if you are successful after the next election, James, are you revisiting any of your commitments? The government takes aim at your £28 billion plans around greening the economy. Can you give assurances that that's not under review, or is it now under review following the Chancellor's statement yesterday?
Well, we've been very clear, not since yesterday, but since many months ago, that our plan to invest alongside businesses to get the economy growing is a really important part of our platform, but that our fiscal rules will always come first. Our fiscal rules must be primary, and we would make sure that anything that we do in government will be subject to those fiscal rules. Now, within those fiscal rules, we know that what businesses want us to do is to invest alongside them to help them invest their private sector enterprise money so that they can get the economy growing. And that's what's really important to get the economy out of the doom loop that it's been in recent years. In places like the US, other countries are seeing government investing alongside businesses to get the economy growing. I think people in Britain should be really disappointed and even angry that the government is not putting the UK in the race for those jobs and investment, because that's what we need to do to get the economy back on track and to make people across Britain better off.
James, a lot of our viewers, a lot of people out there will be concerned about fiscal drag, that is, people being moved into higher tax bands as wages go up in this higher inflationary environment. The Tax Policy Associates team has been doing some great work on that, pointing out that you could be earning between £50,000 and £60,000 a year. You have 3 kids, you're paying a marginal rate of 60, 70, maybe 80% in terms of your tax load. How would a Labour government address fiscal drag? Would you look to raise those bands?
Look, you're right to highlight the impact of fiscal drag. Fiscal drag is drawing 4 million more people into paying income tax. I think 3 million people into the higher rate. Having a big impact on people's disposable incomes. Now, we've been saying for many months, years now, that the tax burden on working people is too high. The tax burden overall is its highest in 70 years. But we're also absolutely clear that we're not going to make any unfunded promises of tax cuts. So we'll set out our plans ahead of the next general election. We will see what fiscal situation we inherit if we win the next general election. But in the long run, we want taxes on working people to be lower, because we know that people are really struggling after so many tax rises from the Conservatives.
A lot of people have made the point that it did look like the Conservatives kicking off some kind of campaign into the election, James. I know that that is at the discretion of the Prime Minister and not under your party's control, but how close are you assuming we are to the next election?
Well, I think we can safely assume it'll be in 2024 in all likelihood, but whenever the election is, we're ready. And what we were all saying in the House of Commons chamber yesterday is bring it on. We're ready for that election whenever it comes.
OK, James, thanks very much. James Murray, UK Shadow Financial Secretary to the Treasury. Thank you very much. Don't miss another key UK interview today. Jim O'Neill will be speaking to the team here at Bloomberg, former chairman of Goldman Sachs Asset Management, of course, of Chatham House, now a member, of course, of the House of Lords. That's at 9:30 this morning.
Coming up, China is considering unprecedented support for builders with unsecured loans. More on the story next. This is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Welcome back. This is Markets Day, 45 minutes into your Thursday European trading day. Gains of 0.1% across the European benchmark. Some of that gain, some of that upside coming from what's happening in terms of the policy mix from China. Bloomberg learning that China may allow banks to offer unsecured short-term loans, unsecured, to qualified developers for the first time. It is a major push to ease the property crisis that, of course, has been dragging down growth in the world's second largest economy. Let's get the details then with Bloomberg's Shanghai Bureau Chief, Charlie Zhu. Charlie, good morning, good afternoon for you. Thanks for joining us. What are the details around this? How significant are these proposed measures?
Yeah, a good question. As you noted, if implemented, that will represent one of the most forceful measure to help prop up the property industry. Chinese developers are struggling, got a big liquidity issue. Many of them have defaulted on loans. So previously, developers, when they borrow from banks, they have to provide collateral such as land and assets, right? But if this policy you mentioned is got implemented, it will definitely help their cash flow, improve their working capital, so that they can free up more resources for debt repayment. So it's good news for the for creditors and property companies and investors. So as encouraged by the news, you may have noticed today the property shares of and bonds of developers listing Hong Kong have surged. But whether this will last, the momentum will continue. We'll have to wait and see. The reality is, all the measures to boost the market this year has failed to push up property prices, as reflected in the numbers in October. Prices fell the most in 8 years in October. So that shows, Chinese households remains, quite pessimistic about the outlook for the entire sector. They're not buying.
Okay, Charlie, so we should characterize this then as something fairly substantial. It would represent, if approved, China's most forceful attempt to plug the hole in the funding needs for this industry. How does this tie into the other policy initiatives we've seen coming through from China?
Yeah, China's regulator in an easing mode. As you may have noticed, that there has been a series of measures, to stimulate property demand, helping developers. Just last night, Shenzhen, which is a southern Chinese city with 17 million population, just announced they're going to lower the down payment ratio for second home purchase to 40% from 80%. So the threshold has been halved. And just a couple of days ago, we're hearing from sources that China has drafted a so-called whitelist of 50 developers that will be eligible for a range of funding from equity to debt to bank loans. Country Garden and some other indebted developers are on the list. So that's all good news for the sector. Why they're doing this? Because the industry is way too important for the overall economy. It accounts for 20% of China's GDP. And unless there's the demand for property is revived, the economic growth target will be hard to achieve.
Yeah, those measures coming thick and fast then. Quite eye-watering in terms of the deposit in Shenzhen, which of course was a red-hot market for real estate, from 80% being cut down to 40%. With all the context, Bloomberg's Shanghai Bureau Chief Charlie Zhu, thank you for the details on those latest proposals and how significant they could be for Chinese real estate. Coming up, we're going to focus on the latest European PMI data and the signals that it sends about the French and German economies. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is a carbon capture plant. It's the fossil fuel industry's preferred method for tackling climate change. Simply put, it removes damaging CO2 from the atmosphere.
But it's also highly controversial because of its popularity with fossil fuel companies.
And the tech is featuring prominently at the annual United Nations Climate Convention, COP28, taking place in Dubai.
Carbon capture technologies have really been a tiny drop in the ocean when it comes to delivering on technologies to cut emissions globally.
In 2022, the technology captured just 0.1% of global emissions. If the world's to achieve its goal of net zero emissions by 2050, the International Energy Agency estimates that we need about 30 times more point source capture capacity by the end of this decade.
In an ideal world, renewable energy will solve all our problems. But that's not the world we live in.
So the world needs infrastructure. We need new bridges, we need roads, we need buildings, we even need wind turbines, which are made out of steel and concrete. Those are the sectors that are known as the hard-to-abate sectors.
At COP28, the oil industry will bring their favorite climate solution, but it's the very industry that has failed to commit to actually building these projects.
The reality is that carbon-emitting industries are going to take a long time to phase out. Until that happens, carbon capture may be the next best option, but it needs to be deployed effectively and soon.
That was this week's mini documentary looking at a controversial solution backed by Dubai ahead of COP28. Carbon capture solutions then certainly going to be very topical as we ramp up coverage to that event. And subscribers, Bloomberg subscribers, can see that full report right now on the terminal and at Bloomberg.com. Let's talk about what's happening in these markets. Noor Al-Ali joins us from the Markets Live team. Good morning to you, Noor. Let's start with the PMI data. We saw the euro drop a little on the French data, came back a bit on the German data, but that also was complicated by the Riksbank. So what do we take away from the PMIs?
Well, look, the German economy definitely did better than expected, or, that downturn has eased in November. France, we also saw, a bit of the numbers here, the economy really enduring another steep contraction according to S&P. But the thing I want to highlight to you is both in the German and the French reports is that the inflation threat, they say, remains at large here. And in Germany, that's been fueled by upward pressure on wages, while in France, that's been driven by services companies. So you still see that room for that ECB to raise rates a bit higher one more time, or at least keeping them higher for longer. So that supports that argument.
That ties in with what we heard from Joachim Nagel at the Bundesbank earlier on. He was being sort of suitably, typically hawkish, saying, I don't see a...
you were going to say Germanic, weren't you?
No, just on a hawkish tack. It's too early to talk about ECB rate cuts. We still can't be sure if the ECB has reached peak rates, was what we heard earlier.
Yeah, no, worth referencing those comments from Joachim Nagel. When it comes, I guess, you can't talk about the European economy without talking about the energy story. You're talking about the wage impulse there. Oil has been surprising this week because of that OPEC Plus decision to push back the meeting. How are we thinking about the next steps for oil?
Well, look, there are already bearish macro backdrop fundamentals driving the prices lower. You have central banks that are pushing higher for longer, so that doesn't really bode well for energy prices. You have that concerns about Chinese demand really still in the question here. I know we're going to talk about the property sector in a bit, but the delay of that OPEC Plus meeting is quite interesting because it hints at least from a trader's perspective, of rift in the alliance itself. And prices are really, quite high. And, given where the state of the economy is right now and concerns about demand, and with the IEA expecting, those supply and demand fundamentals not to be where OPEC expects them to be. So if you're expecting, a rift in OPEC Plus, you're going to start being concerned about whether or not there's more supply in question.
Absolutely, oil in focus. And we have covered that China property story quite a bit so far this morning. So, Noor, thank you very much. Noor Al-Ali joining us from the Markets Live team. MLIV Go is the function to use if you want to get the latest thoughts from the Markets Live team. We will leave you with stocks up 0.2% this Thanksgiving. This is Bloomberg.
work is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime, but we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or you're advising?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Far-right leader Geert Wilders secures a dramatic win in the Dutch elections, promising a referendum on leaving the EU. Country Garden leads China's developers higher after Beijing's biggest push yet to shore up the troubled sector. And coming up in our weekly show, Bloomberg UK, we ask whether the Chancellor's tax-cutting autumn statement will actually deliver the growth he's promised. Now let's take a look at the European markets map. It is going to be a little bit thinner in terms of volumes because it's Thanksgiving. To our American colleagues, happy Thanksgiving. There's a lot to try and think about as we get onto, of course, a pretty big 12 months ahead. Now, European stocks are really struggling for direction. If you look at oil, it's extending some of its retreat. We're also getting some euro area manufacturing PMIs. Now, November services PMI actually rising to 48. So it's a little bit better than expected. The manufacturing also a touch better, but it's really marginal. If you look at the services, rising 48.2 instead of 48.1. A reminder, everything that is below 50 is still in contraction territory. So that's the PMI figures. We'll see whether they have a big impact into some of these stocks, but it's very clear that we look at currencies maybe. There are no treasury cash trading today because of the Thanksgiving holiday. Japanese markets were also closed, and so you look at euro and yen edging higher as the dollar seems to be surrendering some of the gains from yesterday. Now, Bloomberg has learned that China may allow banks to offer unsecured short-term loans to qualified developers for the first time. It's the latest big push to ease the property crisis that's dragging down growth in the world's second largest economy. Now, as part of the package of new measures, regulators, for example, are considering allowing banks to issue so-called working capital loans to some developers. The other story, far-right politician Geert Wilders has come first in the Dutch elections in a shock result that will resound across Europe. Now, the Freedom Party leader will now have to forge alliances in order to lead the country. Joining us now is Bloomberg's April Roach with the very latest. April, if you look at the main takeaways, I mean, people are in a bit of a wait-and-see situation, first on whether he can actually become prime minister.
Good morning. Yes, so as you said, Geert Wilders' far-right populist party is the biggest. It's the surprise winner in the Dutch elections from last night. And there was a late surge in the final days of the campaign trail that really saw Wilders rise to the top of the polls. And it's important to note that his party is anti-Muslim and has quite tough policies on cracking down on immigration. And Wilders has also spoken out against send in so much aid to Ukraine. And he's set to get, his party's set to get 37 seats, more than doubling its representation compared to the previous government. Whereas in second place, we see the Green Left Alliance, led by Frans Timmermans, getting just 25 seats, and the current ruling party dropping down to 24 seats in third place. So the main takeaway here is that, we're seeing quite a radical shift towards the right in the Netherlands.
So when do we know, actually, if he becomes prime minister, if he gets a new government? What's been the reaction so far on the ground?
Yeah, so the Netherlands is a coalition country, and Wilders' party has just 24% of the vote. So it really come down to whether he's able to form agreements with some of the rival parties, and those discussions could take weeks or even months. So it could be a while before we know who will be prime minister. However, some of the other parties have already started to sort of open that door towards forming a coalition with Wilders' party.
April, thanks so much. April Roach there from Amsterdam with the very, very latest, of course, on these latest elections, really sending shockwaves across the Eurozone. Now, we did get some PMI figures just moments ago. They may be a touch better than expected, a lot of them still in contraction territory. So joining us now to talk about the European economy, Jason Davies, his global rates portfolio manager at JP Morgan Asset Management. Jason, thank you for joining us. A lot going on.
Yes.
When you look at the economy, this has to do with oil, this has to do with inflation, what the ECB does next. Like, where do you see value in bonds right now in Europe?
Yeah, I think, the general first point I'd say is we quite like to be long duration. So in Europe, you look at the growth and inflation narratives, you've effectively had sort of 3 or 4 quarters now of stagnation. The forward-looking indicators this morning, the PMIs, very weak, continued stagnation there, maybe a slight bounce back. I think we'll stay around that level. I don't think we're going to plummet into recession in the near term, but I do think there's weak growth. And then you look at the inflation angle, and that's where most of the progress has come. So over the last 3 months in Europe, inflation's been running around 2.5%. So we really think the fundamentals are there, the backdrop for buying duration is there, and then you just look at valuations. And I think you look across the spectrum of bonds, whether that's in the US with 2% plus real yields, or in Europe, 2.5% to 3% bond yields. I think we'll look back on those levels and say they were quite attractive in hindsight.
I mean, I guess hindsight is a beautiful thing. What are you expecting the ECB to do next? I mean, again, this is a difficult calibration exercise.
Yeah, I agree. I think most central banks are actually on the same page now. I think that they've gone from how high do we need to go to how long do we need to stay here for. And actually, you look at what central banks are saying, they're probably under the hood quite encouraged by the move in inflation, but they're not going to declare victory just yet. I do think the ECB are done. I also think the Fed are done. But when they start to indicate cuts, I think they'll need to see inflation moving back very close to 2% in the rearview mirror.
But how much pain can they actually inflict on the economy by getting to inflation at these levels to that 2% if they really stick to 2%?
Yeah, I think they probably will stick to 2%. I think that, in our base case, we actually see, if commodities stay where they are, the Eurozone inflation trajectory reaching 2% by the middle towards the end of next year. So I think, job almost done there for the ECB. I don't think that they'll move too quickly. I think they will risk, causing worse economic growth because you've had this huge surge in inflation over the last year or two, and they don't want to be too preemptive in cutting rates. So they aren't going to hike rates anytime soon, but they're also not going to indicate cuts for the near term.
Jason, we also caught up actually with Mr. De Guindos of the ECB, and this is what he had to say about inflation and interest rates.
This is one of the main risks because now the outlook that markets are taking with respect to the evolution of the economy. I would say that it's a little bit sanguine and so optimistic, and there is a little bit of wishful thinking.
I mean, I guess it's inflation concerns. It's also, how long it takes for a lot of the tightening that they've done so far to get into the real economy. Is there a danger, Jason, that this will come, everything at the forefront at once and that we see a severe downturn?
Yeah, I think the financial stability report that we just heard about there really focused on the impacts of those rate hikes. Yeah. And what we're concerned about in Europe is you do get that non-linear point where labour markets start to deteriorate quite quickly. I'd say the one hopeful point would be that real incomes are going to start bouncing back. Eurozone consumers have been quite cautious. Savings rates are a lot higher. And as wage growth remains quite sticky and inflation comes down, that should provide some tailwind to the economy. So I don't think that you're going to see that, big non-linear event happen in the near term. But obviously there's a risk. The longer you stay here, the more likely that will happen.
Jason, what do you see as, and this could really be anything, as a black swan event? I don't know whether, high oil prices or geopolitics or something that kind of, gives us a little bit of a jolt will be considered a black swan event. But what do you worry about?
The thing that keeps me up at night the most is probably a re-acceleration in inflation. Our base case is that we've seen the supply side impacts of inflation come out. We've also started to see the demand side of inflation come out. We don't think that last mile will actually be that difficult. But if we do get that re-acceleration, not only will central banks have to go again, but that could cause ongoing growth weakness, which would really send economies into recession. So my concern, the thing that I think will be the biggest pain trade for markets is if 2024 is another re-acceleration, another oil shock or another commodity shock.
What's your take on the UK yesterday? So we spent a good amount of time talking about the autumn statements.
Yeah.
Again, I don't know whether it's inflationary, and I don't know whether it actually spurs the growth that the Chancellor promised.
Yeah, I think effectively there was about 30 billion of headroom, and they used about half of that. So they've got a little bit more headroom as well in the spring budget. What I would say is we saw fiscal policy as being a tightening impact next year in the UK. I think what that's done is taking that away. So it allows growth to avoid falling further into recession and weakness. And I think that if you look at the UK economy again, the fiscal policy there helps you avoid that big downturn. But we're even in the UK seeing progress on inflation. We're seeing double-digit wages and double-digit services inflation come down to sort of 5 to 6%. Still very high, but the progress is very encouraging.
Yeah, it's not enough for the Bank of England. We'll talk a little bit more about that. Jason, thank you. Jason Davies there, Global Rates Portfolio Manager at JP Morgan Asset Management, stays with us. Now, coming up, the leaders of Germany and Italy say they're making progress on negotiating changes to the EU's strict fiscal debt rules. More on that story next. This is Bloomberg.
Are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
To the EU's strict fiscal debt rules. Now, it comes as Germany also indefinitely suspends a vote on the country's 2024 budget after a court ruling that blew a 60 billion euro hole in the government's finances. Well, joining us now is our Bloomberg executive editor for Europe, Chad Thomas, still with us. Also, Jason from JP Morgan. So, Chad, great to have you here because there's been so much going on actually in Germany and elsewhere. First, this budget ruling, I feel like it kind of, if not coming out of nowhere, there are many, many question marks on how Germany will deal with this going forward.
Yeah, so the dirty little secret, Francine, in Germany is they've been preaching fiscal discipline to all of Europe for years. And all of a sudden we realize, oh, Germany had about 800 billion in off-budget funds. And this is how they've been financing a lot of the things that they do that aren't in the specific annual budget. And basically what we saw last week is the Constitutional Court saying, you can't do this. This is unconstitutional. And now we're in a budget crisis. And this was just as they were about to pass the budget for 2024. That process was supposed to be playing out this week. And they're going to need to retroactively make changes in the budget that we're in now this year. So they're in a real mess. And all of the coalition parties, they can't agree on the path forward.
So this is problematic, one, but can actually German, could they have afforded what they wanted to put in place? So does it automatically just put them in a different space to some of the southern European countries?
Well, part of the issue is that they have these constitutional limits on spending. And this was put in place because, as we know, Germany tends to want to preach fiscal discipline. And in order for them to spend more money, they basically have to suspend these rules and say we're in an emergency. They actually did that during the pandemic, and they did that for the energy crisis. But the finance ministry, which is led by the FDP, the liberals in the classic sense in Germany, they really wanted to return to this fiscal discipline. It looks like they're not going to be able to do that, so that really is a challenge for them. It's a big challenge for the Greens because a lot of the spending things that they want to do around the energy transformation, climate, tackling climate change, all of that is in question now. It's not that there won't be money for the annual budget, but these things that are long-term transformational things that they've been talking about wanting to do in Germany, where will that money come from is really in question. No one has an answer at this point.
But I guess the concern is that, first of all, if there's no path forward, you don't really know. Germany is not used to this kind of stuff. And it also comes at a very difficult time for Europe. We have many, many elections next year. There's a European Parliament election, and then we had this shock election in the Netherlands.
Well, I think the concern is Germany now is going to be very inward-looking while they're dealing with this problem, as you say, Francine. And so as they focus on that, all these other issues that we have going on around Europe with the European Union, with the continued war in Ukraine, those are things that Germany isn't going to be focused on as they try to sort out their own fiscal house. As you say, we had a shock result in the Dutch vote today. We did see in the final polls that Geert Wilders was leading, but no one expected this big of a win. And now you start a very difficult coalition negotiations in the Netherlands. They're famous for having these coalitions with 5-6 parties in it because there's so many parties that
Italian style.
It's very Italian style, isn't it? Italy seems to be the one who's stable at the moment.
It is actually incredible. And a serious note, I was also speaking to someone from PGIM who wrote this note just last year saying Italy is Europe's sleeping beauty. And then you see the rating agency actually quite liking, for once, what they see. Let's bring back Jason Davies, also portfolio manager at JP Morgan. It's quite incredible to look at Germany and Italy. I don't know whether, what you buy in Germany right now, or whether you just kind of stay away, given all of the uncertainty.
Yeah, I mean, I'd say two things. The first one on Germany is that, internally we calculated roughly next year about a 40 billion hole from what they said they'd do. Now, Germany don't always spend what they say they'll do, but that, for us, makes the supply picture a lot better. So actually, if you're looking to buy duration, Germany wouldn't be a bad place to buy. But going back to the Italy point, I do think, actually, that for the next 2 or 3 months, we could be in the sweet spot for carry because you've got inflation coming down quite sharply. You've got a central bank in the ECB that don't want to hike rates, but they also don't want to cut rates in the near term. They're trying to dampen implied volatility. So for all of those reasons, and the fact that people are quite nervous about Italian issuance as well coming up, we quite like to be long Italy as well.
We also have, Scholz, it's almost like we planned all of this. Olaf Scholz
of course we did.
And Giorgia Meloni, will meet talking about new EU fiscal rules by year end. Is this a game changer for Europe?
I think what the change here is that because of the situation that Germany is in, they're much more willing now to look at loosening these rules. Italy has been pushing this, and some of the other southern European states have been pushing this for some time. Germany has been a bit of a holdout, and all of a sudden they realized, you know, it might benefit us as well as we look at our fiscal picture to be a bit more flexible here.
Yeah, and of course, Jason, I mean, the EU Stability and Growth Pact, right, which basically limits these debts and deficits that bind the Eurozone's economies, which are pretty eclectic, I would say, was suspended during the pandemic. Does it change, once again, on how you look at, you know, the economic pattern of these eclectic economies?
Yeah, I think the first thing to say in the specific case of Germany is actually their own rules that are hamstringing them to some extent. So I do agree, though, that there's certainly an element here of, you know, meeting in the middle now that they're not able to use those funds. I'd say that going forward, there will be rules. I think they'll be less onerous than they have been before. But we think that, you know, fiscal policy is going to tighten next year. We've had this huge amount of fiscal stimulus over the last 2 years. And whether the rules come back in January or they're not organised until the middle of next year, we still think there'll be pressure for economies to tighten budgets.
Jed, we know the two leaders wanted to cooperate more on, I think, energy, defense, migration. What does Germany need from the rest of Europe right now?
You know, Germany all of a sudden is the one who isn't looking well economically as well. And so I think that you'll see Germany more willing to budge on things with the rest of Europe. And now we're going to need to see the rest of Europe being willing to budge with Germany as well. But I think what you see is this interesting relationship developing between Meloni and Scholz, which I don't think anyone would have expected when Meloni was elected. They're kind of on opposite ends of the political spectrum, but even around migration now they seem to be agreeing that they need to, within the EU, take a sort of harder line on this. So,
where does that leave the Franco-German axis?
It does seem a little bit like things are shifting a little bit between Germany and Italy at the moment, and even this discussion about Italy blocking the purchase of a company, a subsidiary of a company in Italy that had an effect on France. And Scholz said yesterday that, you know, that's within Italy's right to do that. It was telling.
Thank you both for joining us. Jason Davies, Global Rates Portfolio Manager at JP Morgan Asset Management, and of course our very own Executive Editor for Europe, Chad Thomas. Now coming up, Novo Nordisk's big French investment, more on the pharma giant's production expansion plans as it struggles to actually meet demand. This is Bloomberg.
On the product may read "Made in the USA," but the sign on the CEO's door often says "Made in India." Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the Pulse. Now, Novo Nordisk is to invest 2.1 billion euros to expand production in France, creating at least 500 jobs. The Ozempic and Wegovy drug manufacturer has been facing supply bottlenecks, mainly due to high demand for its weight loss medicines. Now, their share price, let's look at this, has risen by more than half this year, making the company Europe's most valuable. So let's get more now from Sam Fazeli, Director of Research for EMEA at Bloomberg Intelligence. I've been waiting to talk to you about Novo Nordisk for a long time. I'm so excited to have you on. First of all, why did they decide to invest in France? Is it they just can't keep up with demand?
The second part of your comment is absolutely the case. Why France? I'm pretty sure that they were out looking for some state aid, I hope, or some reason to specifically to one country versus another. Now, France, as good as any other country, it's got a very strong pharmaceutical industry. So, but this is needed. They just can't keep up. The more they make, the more they sell.
I just find it incredible. I mean, I remember like a couple of years ago, they were an okay company. They were considered a little bit boring, and suddenly, like the most valuable in Europe. How much more do they need to produce to make sure that they meet demand?
They can sell whatever they make. So that's the problem. There is incredible demand. We've just worked out, my colleague Michael Shah, who's been doing lots of in-depth analysis on obesity, has just worked out that even if you get up to 11% of the, or 10 to 11% of the obese population, you're already at about an $80 billion market. It's enormous. It's enormous.
Sam, I mean, every day we hear about side effects. Should we worry about the side effects? Is there something that actually, when looking at what's released, that you worry about?
People worry about any side effect of any drug, and there are no drugs that have no side effects. It just doesn't exist because you're pushing biology in a direction that is not the status quo. The thing is, it's all about risk-benefit. What is the benefit that you're getting by reducing weight by 20%, 25%, versus the few that might get a side effect? Remember, it's pretty much the same story as we talked about for 2 years, COVID vaccines. They have side effects, but the benefit is much higher.
Sam, as always, thank you so much. Sam Fazeli there from Bloomberg Intelligence. We'll have plenty more on Bloomberg UK. We're joined by Jim O'Neill. This is Bloomberg.
Okay, so you're moving in on me quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
Just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Well, good morning, everyone, and welcome to Bloomberg UK, a special focus on the biggest challenges facing the British government, the economy, financial services and markets. I'm Francine Lacquet here in London. Now, tax cuts were at the heart of the UK Chancellor Jeremy Hunt's autumn statement. There were some major giveaways, but the big picture has not really changed. The economy faces a rising tax burden over the coming years. Now, the measures also include a cut to national insurance for 27 million workers and a permanent tax break for corporate investment. Now, in total, the policy changes will provide a £21 billion stimulus to the UK economy in the run-up to the next election. And the Office for Budget Responsibility says the measures will boost growth by an average of just under 0.3% in the coming years. Now, the Chancellor insists his autumn statement will lead to growth in a country that has, quote, turned a corner.
We promised to halve inflation, and we have halved it. Headline inflation will fall to 2.8% by the end of 2024 before falling to the 2% target in 2025. OBR expects the economy to grow by 0.6% this year and 0.7% next. After that, growth rises to 1.4% in 25, then 1.9%, 2% and 1.7% in 28. We reduce debt, cut taxes and reward work. I will therefore increase the local housing allowance rate to the 30th percentile of local market rents. This will give 1.6 million households an average of £800 of support next year. I have decided to freeze all alcohol duty until August the 1st next year. That means no increase in duty on beer, cider, wine or spirits. I'll invest a further £500 million over the next 2 years to fund further innovation centres to help make us an AI powerhouse. I'm going to go further and cut the main rate of employee national insurance by 2 percentage points from 12% That change will help 27 million people. It means someone on the average salary of £35,000 will save over £450. The economy has grown. Rather than falling as predicted, real incomes have risen. Our plan for the British economy is working, but the work is not done.
Well, joining us now is Jim O'Neill, former chairman of Goldman Sachs Asset Management and Chatham House, now a member of the House of Lords. Thank you, Lord O'Neill, for joining us. When you look at the autumn statement, what was your big takeaway?
I'm a bit confused, to be honest, Fran. I think you need to get some more of your really policy and data-driven economists on to delve further. It's one of those budgets where I think it's a little bit dangerous to jump to an instant verdict because there's quite a lot going on and being said. So the Chancellor, for example, again this morning, as he made a big deal out of yesterday, was saying his measures have been estimated by the OBR to boost growth by an accumulated 0.5% in the spring and yesterday, implying trend. And I can see why, because I think the investment tax allowance is being made permanent is a very welcome and sensible move, given the UK's woeful investment position. However, if you really delve into the book that goes with the statement and you quiz around, the OBR has actually reduced its trend growth forecast by about 1/10. And I'm not really sure how the two marry, although it might be, hence you getting more people on, something to do with the real oddity of, in between the spring budget and this one, of course, the ONS revised up the amount of GDP by 3% that they didn't think was there before. So the OBR probably thinks there isn't much capacity left in the economy either. But all that aside, which I think is really important stuff for the medium to long term, especially as to whether we can get inflation down permanently, it's a budget that's aimed at Tory principles and unifying the Tory party ahead of the election. And it's leaving grave challenges for public spending for whoever is in power going forward, as you implied with your comments.
But Jim, so basically, I mean, we understand that this package of policies, A, would try to pull out the UK out of stagnation. So A, does it if it's successful, and two, it's also trying to draw this clear dividing line with the opposition Labour Party as we get into the election year. Does that do the job?
Well, interestingly, on the latter, if I've seen the bits I've had a chance to of what the opposition front bench has said, quite sensibly, they agree with the investment tax cut allowance. And I think so that's interesting politically, but it's also good because, as I've discussed with you many times before, the UK has a really dreadful position on the level of investment spending. And to prioritise trying to boost investment spending in the UK should be a priority for any sensible government going forward. Where there is some water between them is, I think, on the welfare and spending side. And obviously the Tories have introduced a more traditional Tory, tougher principle on that with what was announced yesterday. As to whether it will work on growth, I mean, just as halving inflation was really all the efforts of the Bank of England and external forces, what is going to happen to the growth performance the next 2 years is largely going to continue to be influenced by those similar things. If inflation were to fall faster to 2%, then the rise in real disposable incomes that would come through would be stronger. That, of course, would help the consumer. And if investment spending is picking up, then there's a chance growth could be cyclically stronger than they're saying. But against that, and I think I picked up something about a 5% energy cap increase coming in January. If we have further significant cost of living increases being brought in, then there won't be any real scope for consumers to feel better off. So it's not obvious to me that there's a major boost one can be confident to about growth in the near term from this, although, again, going back to my underlying theme, very important things, including some more areas of devolved policies, such as Hull and the East Riding, and centrally to a lot of what I'm involved in, there was bigger powers given to the British Business Bank to be in the centre of a more expansive role of getting pension fund money into the venture capital space and high growth private space. And I think for the longer term, that is really important for the UK.
But, Jim, so do you think they just did what they could? Could they have done more with what they had within the fiscal constraints, or have they played their hand well?
I think they've played their hand politically cleverly for their own party, with some eye-catching things, but it's risky with their framework. Given how much, and again, I've talked to you about this at length, I am not a fan at all. In fact, I'm one of the leading campaigners for a much more sophisticated approach to managing fiscal policy for the long term. But they've imposed this necessity of having it dropping in 5 years' time. But if they really, really believe that, they wouldn't have used any of the fiscal headroom and would have had a much more confident and much clearer decline in the debt to GDP going forward. But because of the politics, and particularly the importance of tax cuts to the right, that's gone by the wayside to some degree.
Jim, overall, I mean, we also have this Global Investment Summit here that Rishi Sunak is hosting on Monday, and there are a number of actually, international investors. Jamie Dimon, we think, is coming, Steve Schwarzman, and others. I mean, what do the international investors think of the UK right now?
I mean, I think they see what is evident, that there is seemingly a never-ending change of ministerial positions in lots of different important industries, different areas. I think there is a sort of a relief-type respect for the current Prime Minister, and especially this Chancellor, in that they seem sort of relatively normal, let's call it, compared with what we've had. But there is a lot of concern that because of the instability of the Tory politics, you never quite know what's going to be around the corner. I think this budget should be seen as designed to try and unify the Tory factions, but because the underlying divisions are so deep, I'm not sure one should have any confidence that that will succeed for too long. But I think by and large, as is obvious, a lot of international business people are more and more interested in what the opposition would have to say and how they would try to run UK economic policy, because there is obviously a reasonable, if not more than reasonable, chance that within not much more than a year from now at the latest, we could have a different government of a different political colour for the first time in 14 years.
Yeah, and we understand, and we know actually that Labour has tried to get much closer to business. Like, is there anything that they can offer policy-wise to be seen as even more business-friendly without, turning away from their roots?
Well, I think Keir Starmer's done a pretty good job on steering them through their own sort of mixed factions within the Labour Party. And as you know, I actually led a startup review for Rachel Reeves, so I've got to the heart of how some of their thinking is. And as not covered a link to this, but a few weeks ago, she came out with a statement saying they give the OBR even more powers about major fiscal or spending decisions, which I think is a very wise decision in terms of long-term UK fiscal credibility. But as Rachel knows and her team know, I would like them to go even further and to give the OBR scope to, in the same way they analyse immigration and ageing as to what that does to the long-term fiscal health of the UK, I think they should be getting mandated to look at the top 20 or 30 long-term infrastructure projects that the Independent Infrastructure Commission recommend, so we can really get to grips with public sector investment. Because, of course, one of the things that will dominate this year looking backwards is the utter fiasco over HS2, but it could be any other of long-term investment projects where the UK somehow has allowed its democracy and complicated political process to just make many of these things seemingly impossible, but all of which are vital to boost our long-term investment performance and our productivity.
Jim, I refuse to talk football unless it's with Jim O'Neill and unless it's about Man United. We were expecting a deal on Monday. What do you think the delay is?
Well, I was chairing a Gritstone meeting yesterday with my fellow board members, and I said it's interesting that this is happening on such a big day. And they all thought I meant the autumn statement, but it was actually the one-year anniversary of when the owners claimed they were putting it up for sale. I haven't the slightest idea, other than the fact they never seem to really focus on doing anything in any hurry. And frankly, whether it really makes a big difference, given that they're seemingly going to remain in majority control, let's just say I hope my scepticism can be proved wrong.
I was going to say, what do you think Jim Ratcliffe can actually change with 25%?
Well, according to all the media, he's going to have complete control of the football side, but quite in an entity like Manchester United, how you can supposedly divorce that from the never-ending commercial juggernaut, I have no idea.
All right, Jim O'Neill, our expert on the autumn statement and on football. He, of course, is member of the House of Lords and former chairman of Goldman Sachs Asset Management, also former chairman of Chatham House. Jim, as always, thank you for joining us. Coming up, our deep dive into the UK's autumn budget will be joined by the chief economist of the Institute for Government, Gemma Tetlow, to discuss the impact of tax cuts on public services. That's next, and this is Bloomberg.
Is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime. But we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters or your advisor?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
To the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Could face bigger challenges next.
Was going to keep rate World Cup. This is a 3.
As the economic picture does. The BOK is getting ready to make
Welcome back, everyone. The UK autumn budget's tax cuts risk rebounding the squeeze, or redoubling the squeeze on Britain's crumbling public services. Now, the government's own fiscal watchdog, the Office for Budget Responsibility, says the program is severe enough that it's, quote, a significant risk to our forecast. Well, let's bring in Gemma Tetlow, chief economist at the Institute for Government. Gemma, thank you so much for joining us. I mean, we're still trying to understand exactly whether this is a game changer, what the fiscal implications are this longer term, and also the inflation implications. What's your hot take on what we heard yesterday?
What we heard yesterday was that Jeremy Hunt got, in a sense, a fiscal windfall. That's really coming from higher inflation leading to higher tax revenues. And he essentially gave away all that money in tax cuts. But he only was really able to do that because he chose not to top up any of his public spending plans, despite the fact that we're seeing higher inflation and higher wage increases than were previously expected. So what that means is that public spending, public services are facing a much tighter squeeze on their budgets than was previously expected. We already thought before yesterday's announcements that the numbers penciled in for the next few years, and particularly beyond the next election, look implausible if you really want to deliver the kind of quality and scope of services that the government talks about. And yesterday just made that even more significant. So, for example, he's added in an extra year of spending squeeze into the next election.
So are you more, how political actually was this budget, first of all, and are you more downbeat about the longer term consequences of this in 12 months?
It was clearly a budget targeted at delivering on the idea of tax cuts, which have been called for in parts of the Tory party, but was predicated on really squeezing very tight on public spending. And it seems unlikely that whoever wins the next election will actually see the spending plans that are currently penciled in delivered. But he's really just kicked the can down the road and slightly sort of abdicated responsibility for dealing with problems in public services that are already quite evident by penciling in those spending numbers.
Where do you see the most resilience in the economy, Gemma, and what do you worry about the most?
So it's interesting. I think as Jim O'Neill just talked about in your previous interview, the new measures that were announced yesterday, the Office of Budget Responsibility does think will improve growth. So particularly the national insurance cut boosting employment and the full expensing for businesses, increasing business investment. But at the same time, they are now taking a more gloomy view on some other aspects of the UK's potential for growth. And therefore, actually, the medium to longer term picture for the UK economy net from all of the announcements yesterday was actually somewhat more gloomy. And I guess to sort of make the picture even more troubling, the OBR is still quite significantly more optimistic about growth in the next few years. And certainly the Bank of England, who take a very gloomy view, and even most other independent forecasters are somewhat more gloomy than the OBR. So it was a sort of combination of both what looks relatively optimistic in the OBR forecast compared to others, but at the same time still very grim in terms of the slow rate of economic growth and the weak recovery of household incomes over the next few years.
Gemma, let's also bring Joe Mays from our UK government team. So, Joe, there's a lot of chatter now about a possible May election. What were the clues in it? Or I guess it's because the Chancellor didn't rule out an early budget.
Well, yeah, so he was asked this morning, will you perhaps do an early budget? And Jeremy Hunt said, I haven't made a decision yet. Normally it's in March, but, I'll make a decision at the appropriate time. So he certainly didn't kind of quell that speculation. That payroll tax cut to national insurance he announced yesterday, fast tracking it to January. Again, that was a clue. Are the Conservatives trying to roll the pitch here by bringing these tax cuts fairly quickly? Perhaps have another early spring budget with more tax cuts announced and then hold a snap vote thereafter. That's the theory amongst some in Westminster. We have the former Cabinet Minister Simon Clarke saying yesterday he expects a May election. So, yeah, certainly that talk has grown around whether the Tories are gearing themselves up for that. Obviously, there'll be risks because they are still 20 points behind Labour in the polls, and if you go early, you don't necessarily give yourself time to win back some of that public support. So, yeah, difficult decisions for Sunak to make in the near term.
Thank you both, Chief Economist at the Institute for Government, Gemma Tetlow, and Bloomberg's Joe Mays. Don't go anywhere because both stay with us. This is Bloomberg.
Your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Now, still with us, Gemma Tetlow, Chief Economist at the Institute for Government, and Joe Mays from Bloomberg's UK government team. Joe, will the budget yesterday have done anything to help the Tories with the polls, or is it just about unifying the party?
I think there's a chance it will help them, and the press this morning, the tabloid papers, lead on those tax cuts that Jeremy Hunt announced. It's one of the biggest packages since the 1980s, and that positive sentiment is there. So we'll have to see whether the polls do move. I think within the Conservative Party, MPs were broadly happy with the measures he announced because it is pushing that tax burden. Instead of rising more and more, it's trying to start bringing it down. That's welcome for them. But I think the bigger economic picture, as Gemma was talking about, is still pretty bleak. Those public services cuts that he assumes if those happen, it would be pretty devastating. So I think the broader picture is still pretty unwelcome for the Tories, and there's a lot for them to do to try and claw it back ahead of that election.
Gemma, what's your biggest concern, given what we heard yesterday? Is it NHS, is it public services, or is it something else?
I think the impact on public services is certainly a concern, and also the fact that they are now reducing public investment as a share of national income quite significantly. So whereas they've boosted incentives for private investment, they're doing less public investment, and that is likely to have an impact if that continues. My other concern is about the risk that they're taking by having given away all of the good news yesterday. That means I think it's both politically and economically risky, because if the forecasts move against them again, which they very easily could, they have very little headroom against their desire to get debt falling as a share of GDP. And so that could mean that if the forecasts do deteriorate, next time they could be scrabbling around looking for further tax rises or spending cuts to try and compensate for that. And as I say, it's both economically undesirable because you don't have the space to accommodate those kind of changes, but also politically dangerous potentially if they don't go to the polls before March. Your budget, and it could be tricky.
Thank you both for joining us. Gemma Tetlow, their Chief Economist at the Institute for Government, and of course our very own Joe Mays from Bloomberg Government. Now, be sure to subscribe also to Bloomberg's In the City podcast that I host alongside David Merritt and Allegra Stratton on Apple Podcasts, Spotify, or wherever you get your podcasts. New episodes drop every Thursday. This is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists, because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Adults are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new Bankrate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate